What if I told you that price does not move randomly, but it actually has a memory? And right now, most retail traders are ignoring the one tool that lets you read it. I'm about to show you how exactly volume profiles work, why it tells you what support and resistance cannot, and how I personally use it to find setups before they happen. Normal volume shows you how much was traded over time, while a volume profile shows you how much was traded at each price level. And that is the key difference. Now inside the volume profile, there are actually three main things that you guys need to know. The first one is obviously gonna be the point of control. And if you guys don't know, the point of control is a single price level where the most volume was traded during a session or during a range. And the next one is gonna be the value area high and the value area low. Now remember guys, the value area high and the value area low, or what they pretty much like to call the value area, is that this range contains 70% of all volume that's being traded. Now I want you guys to think of it that everything inside this value area low and the value area high is a fair value zone. This is where the market agreed that price was acceptable. That's why we're able to have the value area high at the top and the value area low at the bottom. So now the next one is gonna be the low volume nodes and the high volume nodes. I want you guys to think that high volume nodes such as this are technically areas where a lot of volume happen and price tends to slow down or consolidate in this specific level. And the next one is going to be the low volume node. They are completely the opposite. They are thin areas where barely any significant prices are actually occurring there, and most retail traders officially call this a fair value gap. But like I said, with volume, you will be able to see the true fair value gap that everybody was teaching you wrong. And don't worry, somewhere in this video, that's why I want you guys to stay until the end, because you will see the true way to spot fair value gaps. Hear me out, because this is where most people stop. They learn the terms, they put the indicator on their chart, and they treat every line the same. Now that is the mistake, because not all volume profiles are actually created equal, and knowing which ones to actually trade is what separates the people who profits from this tool and the ones who just add more clutter in their chart. And ladies and gentlemen, I am gonna be showing you guys how to filter that out. Let me show you the most important thing that a POC does. So there's actually multiple ways for you guys to mark your volume profile. One is by marking it during ETH session, which is electronic trading hour, or the RTH session, which other people would call it New York session. Or if you're pretty much experienced and you have confidence with what you can do and how you can read the price action, then you can use the fixed range profile, right? Fixed profile like this. So let's try to jump into ETH first, which is something that I really love using. So the market opened at 6 a.m. for me and it closes 6 a.m. the next day, kinda like this. Now, looking to this volume profile, I know that you guys are a little bit confused, but don't worry, hear me out. It's the same thing as I discussed a while ago in the theory part. So this one right here, this is what I like to call the value area low. So everything on outside this big orange color is gonna be the value area low. And what that technically means is that every time market is under this low is what they call an anomaly. So everything inside a value, which is all this dark color of an orange, is pretty much where the big institution accepted that this is what they call quote-unquote fair value, or they pretty much agree that this is a fair price that they're willing to transact. So every time that the market goes out of value, that is something what they call an anomaly. So if you are a big institution that wants to buy, every time prices is under the value area low, that is pretty much a discount. And every time prices is above the value area high, which is all the way up here, that is pretty much a price premium where big institutions that wants to sell are going to be selling in this area. Now before that, I know you guys are going to be telling me where is the value area high, but don't worry, there's actually no value area high here, or it's very thin, because the aggression of this entire volume profile is very aggressive to the upside, and this is what they like to call the PBD logic. And if you guys don't know what that is, comment down below by stating I don't know. Yes, comment IDK, so that I'll be making a video about that in the near future. So now once you got that information down, the next step that you want to be focusing on is pretty much what I like to call the POC. Okay, so remember guys, this is the value area low. Every time it's under value area low, you want to be buying. And the next thing is going to be the POC. And this is going to be a very important level after you mark your electronic trading hour from the past day. So once you got your electronic trading hour volume profile marked up, you want to be looking for your value area low, your POC, your value area high, which is kind of a little bit up here. This is going to be your value area high. And once you see that, you can start marking your levels. And this is what I like to see. From here on, you can see that there is a high volume node. And from this alone, okay, you have your POC, your point of control, which is pretty much an area where the institutions traded the most. And then you have your high volume node right here, another high volume node right here, and a low volume node, high volume node, high volume node, and high volume node. And I know you're telling me there's a lot of noise in a chart. Where do I want to focus? You want to be focusing on where the confluences are stacking the most. From here, you did see your point of control. Okay, you got your point of control right here, followed by a high volume node. Those are two confluences in the volume profile chart. So you want to be marking them. And you can see what exactly happened for gold is if we mark this entire level right here, you can see how price perfectly revisited in this level and created a big pump to the upside. And I know a lot of people are going to be telling me that, hey, it just rejected this beautiful demand level. I want you guys to ask yourself this. Where is the level that shows the most precise rejection? Was it from this demand level? No, it was from the point of control that we pretty much marked with the high volume node right here. Yes, you can mark this demand level, your extra confluence, and backing it with proven data. By the way, this isn't discretion, with proven data that all the institutions are also looking, which is this high volume node with the point of control. This can validate for you and say that this demand level right here is a very strong demand level. I'm going to be looking to buy in that level because there is a point of control, and you can see that the market rallied to the upside. So now you understand how to trade point of control. How do we actually trade a value area lows or value area highs? Well, it's simple. So after marking our electronic hour volume profile for the next day, what do you guys see? Well, this is what I like to call the value area high. This is what I like to call the value area low. And this is what I like to call the point of control. And remember guys, what I told you, if your market is balanced, if it's on a D shape, I know this is kind of like a B shape, but if it's somewhat on a D shape pattern, like somewhat like this, because you can clearly see the value area low still. So if it goes outside the value area and price goes back inside, this is what I like to call a value area rejection, where it does not like to transact under the value area. Because remember guys, this value area is fair value, where big institutions agree that it is a fair price. So every time it deviates outside the value area, that is what they like to call an anomaly, where most institutions, if they see it's a balanced day, they're gonna end up thinking that that is gonna be on a discounted price. We want to buy here. If it deviates outside the value area high as well on a balanced market regime, they are gonna be saying that, okay guys, it is kind of on a premium side, we want to be selling up here. So once we have this plot up, I want to be marking this value area low. So once it goes out, we want to be transacting there. We want to be marking this POC as well. It's going to be a very important point. And we want to be marking the value area high, which is right here. And what did you guys see? When the market opened the next day, after plotting our value area levels, I want you guys to understand what really happened. So within this entire value area low level, you can really see that the market specifically went down the value area low. Okay, and then when the market closed and we finished plotting our value areas, the market pulled back perfectly to the value area low, gave us this beautiful rejection, and this could have been your time to start taking a trade, something like this, and move your stop loss below. And where's gonna be your take profit? Your take profit is gonna be all the way up to the point of control, just like this, and netting over 3 RR. Now the same thing as well over here. You can see this perfect rejection onto this point of control. You can easily just mark this level by buying in this level, stop loss down below, or if you want to be waiting for confirmation, which is something I really like doing myself, is you would want to be buying over this level, stop loss down here during the confirmation candle, and you want to be targeting the next high right here that would be netting you over 4 RR. Buying exactly at a point of control like this, targeting on the next structural high, which is right here. The same thing over here. You can see that this is the value area low. Market went down the value area low, and when the day closed after marking our ETH profile, the market opened with a big impulse, pulling back to the previous day value area low, gave us this beautiful green engulfing candlestick, and you can play your long position. So taking an entry over here and targeting all the way to the point of control where the volume is transacted the most within the value area. Okay, so now you guys know the structure. Now here's the part that makes this actually profitable. How do you combine this with actual price action so you're not just watching levels and hoping? Because on its own, a volume profile is just context. It is not a trigger. And that distinction matters more than anything I'll be saying today. So now I'm going to be showing you guys a teaser of one of my textbook setups. So this is something that I always gatekeep and just teach to my students exclusively, but I'll be sharing it to you guys for free in YouTube. So that setup is pretty much a value area high acceptance above. And what does that look like? Well, we do know that the volume profile looks like this. This is the value area high, and this is the value area low, and the one in the middle is what they like to call as the POC. So price acceptance meaning is that if prices is above, okay, remember the thing I showed you guys a while ago about a balanced market, where if the market is above value area high, you want to be selling it down, and if it's under value area low, you want to be buying it up. But this time, if the market is on an imbalance stage, meaning that it is on a verge of just continuously trending to the upside and the momentum is very strong to the upside, if you see price create that breakout right here and you see price develop an acceptance in this level, this is where you want to be pulling the trigger. Looking into price action right now, you can see that the market is obviously very strong to the upside. So if it's very strong to the upside, what you want to be doing is you want to be marking your value area high right here, and you want to be marking your POC. But there's no significance in a POC right now, so let's just mark the value area high. So this value area high, I wanted to make sure that there is price acceptance in this level. So in order to see that is we want to be seeing confirmation. And what I did was I activated my X-ray vision. And if you guys have not seen that entire step-by-step AAE entry criteria, make sure you guys press the video up here, or it's going to be in the link in the description down below. That is where I pretty much explain it in depth. But the general idea is I was looking for acceptance in this level, and you can see that when we had the first initial breakout like this, a beautiful push to the upside, and I waited this beautiful pullback, and once it rejected the value area high again, you can pretty much see into our X-ray vision glasses that there was actually a lot of sellers in the bottom. You can see the imbalance of the sellers right here. But the most important part over here was what happened to the next candle. You can see the candle closed green. The point of control is right below. You can see that there is 188 aggressive sellers that are hitting the bid, 141 aggressive sellers hitting the bid, but to no results, meaning they tried to sell in this level, but the candle closed green. And this is when I took my execution just by looking into the screenshot over here. So what I did over here was I took my entry over here, my stops was just down to this low, and a big question is where is going to be my take profit. So this is where you have to be versatile when marking your fixed range profile. So now you want to be marking your swing point from this low all the way to this high. And what do you guys see over here? You were able to see your point of control. And when I saw this POC, I knew that this was the area where market institutions were trading the most. And you were also able to see that you have negative selling delta in this level. So I took my take profit to an area where I know that institutions might be entering the market. And where was that level? The first level was pretty much this point of control right here. Next, we had a maximum selling delta where a lot of sellers were kicking in around this level, and we have ourselves a beautiful supply level. So this is when I put 2 and 2 together, and I told myself, okay, I want to take my exit just around this level, and that is pretty much perfect since that trade would be over 2RR. So you can see perfectly right here, we took our entry and market pumped to the upside. I want to share this one mistake that I see traders make with volume profile that kills their edge immediately. It is actually something that I did for months before I figured it out. And let me show you guys in the charts real quick with what I mean. And that specific thing is marking correct volume profile levels, but the problem is just taking entries directly because you think that that is a value area high and that's an area where you want to take an entry. So other people, they see the POC, they just take an entry right away. They saw this value area high, and once they mark their value area high right here, they immediately take their buy positions just in that level. And what ends up happening is them getting stopped out. They just put a limit and they're like, guys, there's a value area high that might get rejected, and they just get railed through. The same thing over here, they mark their levels just like this. So pretty much after marking their volume profile, market closed over here, and they're like, okay, I want to set a limit right away up here, and they don't get tagged and they're questioning what is happening. Volume profile is a scam. Then again, they mark their volume profile like this too, and they're like, oh, I want to be selling when market arrives at value area high because that is an area where market will get accepted. So they try to sell up here, which pretty much gets stuck later on. And let's say their stop loss is too tight, and they put their entries again in the POC because they think that is a really good rejection level. So they're like, okay, entry in POC, stop loss above this high, and they just get taken out. This was the problem that I had for a few weeks until I realized that I should just not take it blindly. You should be aligning price action with volume profile because volume profile will increase your probability of having a successful edge. So here's a summary. Volume profile shows you where the real market activity happened, not where you think it happened based on a random line that you guys just drew. So the POC right here is going to be your magnet, and this value area is pretty much your fair value range. And your high volume nodes like this is where price slows down, which you can pretty much see over here. Every time it enters a high volume node, it just stalls down like this. And please, please, please remember, I want you guys to use volume profile as a context and use price action as your trigger. And never trade randomly just because there's a value area low in this level, so you just set a limit. Never ever do that. Always wait for price action as a trigger. We go way deeper on this inside the free Discord. There's a free weekly webinar where I walk through the live setups every single week. Volume profile, price action, the entire framework in a real market condition. If this video gave you value, the webinar is going to be 10 times that. Link's gonna be in the description down below. It is completely free to join. Now see you guys next time. JCAC Trades out.